This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:03 p.m. on June 10th, 2019. This is a weekly strategic webinar like we do 2 or 3 times a week. Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Google YouTube channel, Clueless A Trading YouTube channel, for viewing by all members and free trial subscribers at their own convenient time, and for anybody else out there who has internet connection and would like to learn something real about the markets. It's all available on the free resource on the free webinars that are delivered on a weekly basis at Clueless A Trading on Google YouTube. Thank you for attending. I'm going to get straight to the point here. Since my second to last webinar, which was a very strategic one, a very precise one, and that was roughly about a week ago. I believe it was a Monday, I think it was Sunday or Monday last week, not this Sunday. I would hope that all of you got a chance to listen to it, because everything that we talked about and everything that I explained and everything that I thought was a high probability event of what was going to happen, the outcome both up and down, but pretty much the trajectory of the market, given that we were going to base at around Monday, explain all that, has come true. The Dow Jones Industrial Average is up 1,600 points since June 3rd. All of you are fully aware of that, given very powerful trade alerts that have been delivered pretty much since Friday, well, almost every day, but more so on a more conviction basis on when the market hit the lows on Monday afternoon, or I think it was early afternoon, June 3rd, and all the way up. So this move here from last Monday was change the color, was 1,600, roughly about 1,600 points on the Dow, which is a lot. Okay, a lot. The charts which were explained on the video on produced last Sunday, as well as the one on Thursday, which was just a couple of days ago, all have come to fruition. So if anyone wants to know what's really happening in the markets, well, feel free to listen to them. There's no reason for me to repeat the same stuff. So let me just scour through some charts here. We all know the news, what's going on. We had a terrific resolution to the Mexico tariffs, which was a huge, as I'd mentioned, was not going to go through based on my game theory assumptions. And you guys can all listen to that in the previous videos again. The US-China trade deal, which is still moving along, in my opinion, still moving along pretty much in the right direction. There have been several friendly comments coming out of the Chinese premier, as well as President Trump, more of a softer tone. I'll explain again on my previous videos. That has propelled Brexit is in the background right now, so not that important from a market relevant standpoint. The Fed is extremely market friendly, so that's a plus. And all that has propelled the market back past 2,900, and it closed a little bit slightly below that. And that's kind of standard procedure, at least for now, as my charts have shown repeatedly throughout the day. And we just had a humongous rally. So I really sincerely hope that all of you made some money on this first leg of the move, which was literally a gift. All these tactical retracements are gifts. And I want to harp on about the behavioral stuff, you can take a horse to the watering hole, but you can't make it drink. But it's true. So what has happened overall, and I'm not talking generally about my members, our members here at Clueless A Trading, who I'm sure have taken advantage of multiple winning trades that have been delivered, aside from the overall market, that the majority of retail and in many cases institutional investors are still on the sidelines. Great. That means there's more fuel for the upside to continue. That's just purely from a behavioral standpoint. More cash on the side means at one point they will have to come into the market. So this surge, which has been a V-shaped recovery, pretty much the same as every last time it's happened. Every couple of times it's happened where we have dropped 600,000-700,000 points, we have had a massive reflex bounce off some very tactical levels. Go through my charts, it's all there. And basically, most traders and investors have not made any money. It's a fact. Listen to my last two videos from last Thursday and this past Thursday and then previous Sunday. And I explain all that stuff. It's a fact. The general level of pessimism and fear is, to be honest with you, maybe it's a little bit less than what it was when the markets were crashing and burning for a couple of days, pretty much here, and hit these tactical bottoms, which I pinpointed for you all to the date, 8th of March, because it was pretty evident on the charts right there, the hammer reversal. I showed the pattern, all that stuff. And it didn't quite get there. It didn't quite get to that 2,700 level that I was hoping, but it didn't matter. It didn't matter because it turned around, and that's what happens, like I explained in my previous video, that sometimes the algos know pretty much that's what the shorts are. And I explained to you all that there was a falling wedge pattern here on the stochastics. I repeat again, this is not rocket science. Anyone who wants to learn about this stuff can sign up for the advanced coaching sessions, or they can simply ask me. I mean, I've already explained it on my video, so I don't know what more to ask. And these type of things that I detect here at Clueless A Trading, a falling wedge on a major internal indicator on the daily, not on the 15-minute, not on the 1 hour, not on the 30-minute, 5-minute charts. I'm talking on the daily charts. And I drew out this falling wedge, and I told you all on that video that we were going to basically, within a matter of a day, 24 to 48 hours, we were going to break out. And we broke out hard. These type of things don't come too often. You all know that. So if you guys don't take advantage of these moves, look at the size of this candle. That was the 500+ point day. Generally speaking, barring, like I said, any unprecedented black swan events like a massive hostile tweet coming out of President Trump, a massive hostile comment coming out of the Chinese media, something completely left field, which we have gone through quite a few times, right? The Mexico tariff was an incoming missile from nowhere. Even though it was a strategic negotiating ploy, it didn't matter. When it happened, the markets just said bye-bye. So if you're long positioned, you lost money unless you were following these type of charts and you bought into the heart of the darkness, scaled in, brought your cost average down, or initiated new positions, and then you're sitting very pretty. So barring that type of scenario, and from my reading right now, President Trump at this point realizes that if he goes that ballistic sometimes, it will only hurt our financial markets, which are directly correlated with the upcoming election, 2020. These are all tied in. Okay? Nothing moves independently of each other. A $6 trillion loss in the markets, as I explained in the previous, video, $6 trillion, okay, is not a joke. And President Trump knows that well. He's very smart about these things. Okay, to make a long story short, at this point, from the vibes that's coming out, it doesn't look likely we're going to fall into another tweet trap. That's just my reading. The only thing that could be the European auto tariff stuff, but that's been pushed into July. So yes, anything can happen overnight. But aside from that, I don't foresee any type of major again, I don't read his mind as to what he's going to write, President Trump's going to write, but I think we're in that period where the market basically now has a chance to make a run at the all-time highs or close to it. Now, talking about this this falling wedge here, these are huge events, technical events that were forecasted prior to happening, and any of you could make substantial amounts of money. I'm not even going to put ROI percentages because you all know that from this, just taking the basic SPY, for example, the SPDR ETFs, that you could make multiple triple digits on trades as long as you stuck with the trade, or even intraday for that matter, 200-300%. With small amounts of money, you could build a small account up to levels where you have excess liquidity to participate in different ideas that are presented throughout the day. So absolutely no excuses, because I'm showing it repeatedly and I'm showing it to you guys again. At this point where we are, so anyway, so to continue with this thing here, so given that you have this massive surge, remember what a falling wedge looks like, right? I've already explained that repeatedly. Sorry, it doesn't fall out of the wedge, but generally just exactly what it looks like. I mean, I don't have to redraw it again. You break out and you break out. And all along the way, you look at the short-term charts to manage your intraday profits, and you look at the longer-term charts, in this case the daily, to manage what level of sizing a position you want to hold overnight, or at least the fact that you should have some long positions, given the fact that it's pretty evident, technically speaking, that even though we are right now kissing the overbought levels here, and when we look at the weekly, you'll see clearly that technically speaking, again, there's more room to move on the upside. And these lines prove that. You can move to 29.30. We got to 29. This is obviously the minis, but anyway, it's all there on my Twitter feed. Look through the S&P charts. I don't want to rehash the same stuff that I worked so hard during the day to present to you all to help you all make money. Okay, so no reason for it, but you can see that clearly. This was probably a seminal moment in the market. And honestly speaking, you don't see this too often, ladies and gentlemen. This wasn't a falling wedge. It was a V-shaped move. This dragged on, gave you a chance to cost average down, and then rewarded you very handsomely as you bought into cheaper and cheaper prices. And then the buy signal triggered with this hammer reversal, and everything was walked through for everyone. And once you got that type of bar, even if you didn't get in here because you couldn't get you couldn't find the key to get out of the bunker, right? Your mental bunker. You could have easily bought in here. You could have bought here, and then of course this. And now we are here. So that's it. So that's your daily chart. Still looking good overall. Looking at the full picture, this was the highs in the market. This is where we are right now. We're above the 50. We're above the 34, which is starting to curl up, which is good. Mid Bollinger is starting to curl up. All levels are put in place that if we break this, we're going to come down. If we stay above this, we're going to go higher. It's very easy to read. Anyone needs any help, I've repeatedly posted on my Twitter feed. If you do not understand these type of absolute precision charts that can put in crap loads of nice dollars in your pocket, then feel free to DM me. Otherwise, you're just wasting your time, you're wasting your life, you're actually wasting your money, to be honest with you. Because these markets are giving away free money only if you are a tactical trader, literally. Don't have to play with that much money. It is still, markets are always risky, technicals or no technicals, but even with moderate sums of money, small sums of money, you could make a pretty decent amount. Let's just put it this way. And if you put in a lot of real money, well, you made yourself 6 figures plus. No question about it. And I won't even mention beyond, where a $4 call today, after the earnings went to about 30, and today, that $4 call, which I still have on my screen, I don't own it today, I owned it on Friday, right? Before the earnings last week, that $4 call hit 68 today. 68. So do some quick math. 68 divided by 4 is basically a 1,600% return on your money. 400 would be, 17. So 400. I just want to be exact on this, okay? $400 put into Beyond on one call, okay? Would have generated you $6,800 in profit. And imagine if you put $4,000, you'd be taking out $72,000 on Beyond. I'm not that crazy. I wish I did. But a $4 call, and that was the call which was I told you to buy Beyond before earnings, the 110 calls. The 140 calls that I told you all to buy on Friday, or was it Thursday? I can't remember. Expiring June 14th, this week. That one went from 8 to 45 today. Now, these are obviously black swan, white swan events, okay? But I'm just showing you examples of stocks that were given to all of you prior to earnings. If somebody couldn't bet $400 on Beyond, well, what can I say? Beyond meat. Zoom was another killer. Lots of winners, gentlemen. Lots of winners. And these are obviously the highlights of that. AutoZone. Gave you guys at 90 cents a dollar. Those calls went to $11. That's more than 1,000% overnight. So I'd like to hear some excuses, but hey, it doesn't matter. I didn't ride it to 11, but I wrote a decent sum to make some decent money, and I didn't put that much money in either. I wish I had. They were in 24 hours overnight. Of course, AutoZone went up more because the Mexico tariffs didn't go into effect. And I explained to you all also that AutoZone's made 60% of their parts are assembled in Mexico. All right. So bottom line is there are tons of great trades that have been put in place for all of you. Lottos from 40 cents, they go to $3. And in between, during the day, you got to learn how to manage your trades. You got to know when you take some down, leave a little bit out there. That's something you got to learn on your own. No one can teach you that because I'm not sitting behind you running your book. You just got to look at the charts. Got to look to see how much profits you got on your pocket. And then you do what you need to do. So anyway, the good news is that most traders out there have not made any money, and neither have any of the institutional traders, because they never told you to buy those Monday, June 3rd lows like we did here. So the good news is that there's more room to move higher. Market gets fully, from a fundamental standpoint and a technical and a behavioral standpoint, get fully overbought. Excessive optimism. There is none. Even on a day like today, the market did a standard pullback. A standard pullback. Nothing non-standard about this pullback. Lots of profits were, like I told you, got to scale out some of the money. It's not that hard. Yet, the market was up 200 some change. It ended up about 80 points. And I bet you out there, they are, hold on one second. I might sneeze, so sorry about that. So bottom line is that this minor pullback is looked on by the talking heads out there, by the retail trading community, by a lot of the so-called analysts, by all the demons in your head as, oh Lord, we were up 220, now we're just up 78. The market was going to hell in the handbasket. It was a standard, and I'm showing you what I see in front of me, 1 hour reset of the stochastics getting severely overbought, and then they got oversold. It's happened zillions of times. It's no guarantee that they won't get more oversold. But aside from any type of major black swan event, and anything can happen, we have to be prepared for that. We're in the stock market. That's why it's called risk assets. Aside from that, all levels have been put in place where we should bounce from, and that's pretty much what's going on. Your 50% fib retracement is a key number. By now, you all know that. are people who at least are trading, and people who are trading on my suggestions, and people who are trading on utilizing these type of very accurate precision tactical charts. So the 50% retracement is 28.44. So as long as we hold that 28.44, 28.46 level, we are fine. We break that, all of a sudden the pattern changes and the downside comes into play. And I don't write anything out. We could write our weight all the way down here. It doesn't even need a Trump tweet. It could be anything. All right? It could be a currency blowout situation. It could be the bond deals shoot up a full percentage. I mean, shoot up like, let's say, for example, the bond deals shoot up 5%. You know, it causes jitters in the market, because as bond deals go higher, bond prices are coming down. So if bond deals really shoot up, they were up 2.8% today. That means money came out of the bond market and yields went higher. As I put out on the TNX charts that I put out there in the Twitter feed, in one line, we need bond deals slightly higher right now. We need money to flow out of the overbloated, overvalued government bond market, which are considered to be the safe havens. We need money coming out of the safe havens into risk assets, which would be stocks. And that's pretty much what happened today and Friday. Mike brought out a good point. The job thing, this was on our Thursday session. I said it wouldn't matter, because what really matters on the relevant point at that point, job growth was anemic. We had a horrible jobs number. So why did the market go higher? Because that puts the Fed at bay. There's no inflation. And more importantly, once we get these trade issues resolved, the Mexico one has been put out of the way right now, and the China one will be hopefully done soon, then the job numbers will be looked on in the rearview mirror. These are things you only learn when you work in the pits and the canyons of Wall Street for many, many, many years. It is not the news, but the reaction to the news that matters. Of course, you make the most money if you know what the reaction is going to be. And most of the times, not all the time, but most of the times, I actually have the right forecast on what the reaction to a certain news event would be. And that's where the big money is made. Okay, so bottom line is this possible that we go down and plumb the depths at 2,700 again, all the way from down here? Hey, look, anything's possible. But what I'm saying, what we are seeing here right now is at this point, pattern completion comes into play at two levels. One is a gap fill right here. You can see that line, 29.38. And the final one at 29.61. 29.61 is obviously the high of the markets back in May. So I'm not even looking at that. I am basically looking at this level, 29.20 and possibly 29.30. This week, monthly options expiration, Donald Trump's birthday. So wish Mr. President a happy birthday. Okay. I believe it's the 14th. Oh, it's an options expiration day. And on the best case scenario, that's where we go. There is a fib retracement here. This is the 78.6 retracement at 29.11. I'll take it. We got enough strong ideas in the market. They don't all move with the spies. But I'm just saying overall, nothing's really, this is just, like I said before, uptrending channel. You can dissect it all the way you want, but looks good to me so far. Things don't look good once we break below the 50. Next is a zoomed in chart since this past Friday, right there. Okay, huge rally. This is obviously the futures market, so Globex futures markets. You see this stuff is trading obviously, after hours and pre-market, and this is where we are. Okay, and I even put some very precise arrows and stuff. Any one of you can do this. This is where basically the support is. This is either they'll bounce it or they'll drop it. So you know pretty much what to do. If you're holding any type of position or larger position and you have profits and you're seeing it's, you know how things are with markets. You're up maybe a couple of $100 or a couple of $1,000, and then you start to see it like shrink. You're like, oh boy. So before you do some oh boy and sell it right before it starts to turn up, Just refer to the charts. I know it happens pretty fast, so you got to always take profits, in my opinion, take full or partial profits on the big run-ups. Then reevaluate your situation. That's the way to do it. That's the way I do it. So this is your hourly chart. This is your daily. The daily still looks good. The next level of where things come into play is around 29.12, 29.15. Upper Bollinger, arrows and put in place. Best case scenario, the E-minis or the futures go to 29.30. That's my opinion. That was the last breakdown level, and that was back on the 7th of May. This is your weekly. The weekly stochastics are still looking good. You see that? This is where I told you guys to buy as the stores were didn't even turn, but they were plunging in there. They started to turn on the day that what was it, 5/27, and then that was a Friday, and then on this is classic, and then on Monday, the green. This is where we this is where we came down to. Told you guys exactly. This arrow I did not shift. This was there from way back. I told you this is most probably a pattern symmetry based on what I was seeing on the internal stochastics. Again, it is not hard. If you want to keep telling yourself it's hard, it's always be hugely hard. You know what's hard? Hard is SpaceX. Hard is frigging putting rockets up there that go drop the payloads in the space stations and then come down to the exact spot on Earth. All right, on the launching dock. That's hard. So please don't even attempt to tell me this is hard. What's hard is all the mental blockages we all have in our brain, the fear that's basically had you miss some serious money. I mean, I could have made obscene money on this Beyond Trade and Zoom. These are all alerts that I put out there for all of you. Or AutoZone. We have a big winner after hours though on Casey stores. Told you guys to buy it. Options were $1, $2. Stock's up frigging $15 right now. But nothing beats Beyond and Zoom. But if you're not there, what are you gonna do, right? Anyway, I'll get into that. So bottom line is that I told you guys this would be a pattern. Review my charts from that time. Scroll back. Please feel free to see it. And this is exactly what's going on. So given the size of this is a weekly bull flag in play here. Given the fact that we are generally on a bullish week here on monthly options expiration, I would expect it to move up a little bit more. And again, they're going to try to press the market down, scare the living daylights out of all of you again and again and again. So you have no positions, and then they'll run the market up to new highs. It's exactly the way they're going to do it. It's exactly the way they're going to do it. Okay? That's what the machines do. They know exactly when to take you out of positions. So without the luxury of these type of clueless trading tactical charts, again, not mincing words, you are completely lost in the woods. Completely lost in the woods, whether it's a bull market or a bear market. Because the algos want you out before the big move. And they got a lot of you out. And I know I kept a lot of you in because I had you just focus on the charts, at least have some positions so you can enjoy the benefits of a 500-point move in the market. Okay, so weekly still looking pretty good. The big move is over for now. This is the tail end of the move, which will possibly take us again, maybe 100, 200 points. We were up 170 points from where we closed at. So people dreaming of new highs can happen. Certainly can happen because this is certainly looking like a bull flag. Bull flag breaks out. We could kiss the underbelly of new all-time highs. And this stochastic is certainly showing that there is no let up yet. Okay, let's take a look at the Thinkorswim charts. Try to keep this short. Okay, where is it? Apologize for the delay. I should have all this ready. Okay. let's get this out. Facebook told you all to buy it hands down at 160 and stuff. I told you that it was going to go to that gap, and it went there, 177. Those little puny little calls you could have bought at 20, 30 cents went to, I was telling people to buy the 175s. Remember? They're what, 20, 30? At one point, they were like cheaper. Let's call it 30 cents. They went to or let's call it 40 cents for quick math purpose. They went to $4.26 today. How long did it take? A week. So 426 divided by 40. What more do you need to know? You made 900% on your money and 1,000% overall ROI. All I had to do was stick to this Facebook chart that I kept on showing you all. Showed you different ones, but this one, for example, even on the daily, here was the gap fill. Guess what it did? It went exactly to that gap fill. You can't get any better than this. Seriously. Okay? You can't. It hasn't even come close to the 50-day moving average. It's going there. But first, it's got to fill this gap, move around a little bit in here, maybe drop a little bit, but everything looks good. Everything looks good. So a simple 40-cent call goes to $4.50. All you had to do was look at the stows and follow the candles and not worry about freaking out every time the market was down 30 points from its highs. Facebook, Nvidia, these stocks are way off their highs. So they have the highest risk reward or highest reward potential based on underlying risk. There are two ways to play this game. One is to chase it the higher and higher it goes, and then but that's momentum trading to the extreme where when the big fast moving machine starts selling, you won't have time to run. When you buy the things right off the bottom, or at least the tactical bottom, at least you know what your low side is, what your downside risk is, and the upside, like Facebook and Nvidia, which I shown. Look at this. I mean, and let me remind people of good old Chipotle. Look at what I told you about Chipotle. Look what happened. And I'm not just talking today. I'm talking Friday. I'm talking last week too. Calls were given to you all at around $3. The 750 calls, they were way out the money. They went to $7.50. That's more than a double on your money for just taking a small $3 piece of a call. 750s. Forget the 730s I told you all to buy. Those were they went from $3.61 on Friday. Hopefully some of you did that, or else if some of you didn't, I mean, people who have no idea what, I don't know. Forget it. I don't even go there. The 361 on Friday at the close, they went to $10.48 at the high today. That's the Chipotle 730 calls, and this stock's still going higher. Okay, so anyway, so if you look at this, don't overanalyze this crap. If the market cooperates, which it certainly is, and the China tensions start to boil down a little bit, another huge development which I posted out there earlier today before the market, that Justice Department officials and President Trump himself said, I still can't say that name, Huawei, the big telecom company, the Chinese one that we banned. I'm a real idiot. I can't pronounce the name. The Huawei, that they will use that as a bargaining chip. They might get some reprieve because a lot of our telecommunications companies use their product. So it's going to cause major disruptions. We might delay some of the ban. So all that is good. Nvidia is not necessarily involved with that, but they're still, a chip company. So if you just look at the simple way, you trade the stock at least to 160. It closed at 148. Doesn't need a rocket scientist to figure out there's a big fat gap here. That's a lot. That's 170 to 200. That means you will basically get a 500+% return on your money, if not more. So I'm not even looking at that. I'm simply saying that the stock could move up and just the way it's done repeatedly, hit this big downtrend line from 293. And you look at this stock. I'm not saying Nvidia is going to $300. What the hell do I know? All I'm saying is, as a trader, you can trade this baby for a good 10, 12, 5, 6, 7, 8, 9, 10, or 11, 12 points. And that's a lot. So if you're sitting there scratching your head because you bought it at $1.10 and now it's at 80 cents, you're like, oh my God, should I get out? Well, that's your problem, not mine. Small thinkers will always remain small. You got to think big. I'm not asking you to basically go out there. Actually, I'm not asking you to do anything. You guys do what you need to do. I'm just trying to help. So this one looks pretty damn good to me. And the calls are real cheap. And I didn't say buy the one in the money. I said buy the 160s with 2 weeks out to go. 21st June. So we'll have enough time to react. And I've shown a lot of these type of trades where the calls are at less than $1 and stuff. And then by the time all said and done, they get to my targets that I showed. They're at $6, $7 or $4, $5. All right. So let's take a look at the Thinkorswim version of the spiders. We have an inverted hammer. It's a red inverted hammer right there. Not necessarily good. Nothing to get really alarmed about. That's an inverted hammer right there. Okay. This is you can call this a shoulder. This is the left shoulder. This is the right shoulder. It closed slightly below the right shoulder. So for a technical perfectionist, yeah, it's not good. It closed slightly below the, it's an inverted. So okay, I understand that. But then I look at my other charts. I look at the internals. The simplest internal to look at is your stochastic, still trending higher. Stochastic, the percentage D is just, I believe the yellow one is the percentage K, is starting to turn up. That's good. So this little profit-taking program, and one of it was triggered because of that unfortunate helicopter crash on the 54th helipad. We're New Yorkers. Every time something like that happens, it reminds us, so it doesn't remind us, but we don't know whether it's a terrorist attack or whether it's, whether it's an accident. Thank God it was just an accident. The pilot died. God bless his soul. But it wasn't anything else. So this was, so anyway, so that, and of course, after such a huge rally that took us to new short-term highs, 1,600 points, at the height today on the Dow Jones Industrial Average, you'd think, wouldn't you, that there was going to be some give back? And the give back wasn't even negative. We're still up 80 points. So this is your, if you want to look at it from a technical standpoint, that's your right shoulder, that's your left shoulder. There was a left shoulder here. There was a right shoulder here. That was taken out. And now we basically are at this level because from here to here, towards the highs, there is not much resistance at all. So the market should rest a little bit, maybe a day or so. Maybe Wednesday's our hump day, down day, right? And then we rush into its monthly options expiration on Friday. And remember, the way it generally works is that the market goes up by the early part of Friday and then gives in as options expire, premiums are sucked out, and all kinds of different things happen underneath the surface on monthly options expiration I'm talking about. So here is one of the things here I just noticed, and this is something that is basically money in your pocket. I wish I was actually I don't wish that, but I hear sometimes these videos on Google about these guys talking about how they took 400 million to 400,000 in a matter of months, blah, 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 or a matter of days. God knows what they say. These guys are serious salesmen. I wish sometimes that I was like that just to get people going, because they got maybe 1,000, 10,000 people listening to that garbage. We have little less than 100 people listening to this real stuff. But what I'm showing you here is pure, unadulterated money-making signals. Very easy to understand without being a snake oil salesman like 99% of those videos are. And many other services are too. I'm not going to put anyone down, but hey, that's just the way it is. They're making their money their way. I'm making my money my way. I'm certainly not making a heck of a lot of money doing this service. I'll tell you that, okay? So saying all that, look at what happened here. This is classic. Okay, that is powerful. We have the third histogram signal. Very good. So what if we get 5? That takes us 5 or 6. That takes us into options expiration on Friday. And then we get it pulled back the first part of next week before we hopefully make a sharp run towards new highs into the month end with end of second quarter window dressing, portfolio markups and such. So this is positive. I mean, just look at this. That is this was deeper. This was a much deeper sell-off. Okay, understood. This was a pretty deep sell-off for where we were. And the stochastics got oversold as much as this deep sell-off that happened on Christmas Eve. Look at that. We went all the way down here, yet we are all the way up here. What would you call that? That's known as a positive divergence, positive div. The stows hit the same fear, technical oversold levels, complete pessimism, complete terror. But of course, these are showing actual selling panic capitulation, which I told you all. Also told you right on Thursday how the advanced decline line flipped. It's on my Twitter feed. Anyone who cares to just read those 1 or 2 lines just made themselves a significant amount of money. Told you that the buy programs were kicking in to buy the tech stocks. That was on Thursday. And look what happened on Friday. You could have bought all the techs you wanted on Thursday because they're damn cheap. They were all down last Thursday. Okay, so this is very good. And there's nothing to say. Are we getting overbought? Absolutely. Absolutely, we're getting overbought. But overbought can move sideways. That means a rally continuation. Or it can just do a sharp down. We shall see. We shall see. We don't know that yet. If the histograms keep on expanding for at least for this week and beyond, then you have a good shot. We're going to retest the new highs real fast. But that we shall see. Now let's take a look at the weekly. The weekly chart is just starting to turn. This is the point where this one has not fully confirmed yet. A really bullish blind bull, and I'm certainly not a blind bull, will tell you that this is definitively going to go straight up and cross over the percentage K line and blah, 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 like it did here, which triggered off a huge multi-week rally in 2018, if you all remember. Okay, I don't even know that yet. All I know is that when it does cross over, it creates a multi-week rally. We're not in that crossover stage yet. So what? We can monitor it. We can see what it does, because as it's moving forward, the markets will basically surge forward. And if it does cross over this time, and these are some of those words that I say, and when they come true, you'll say, oh, wow, he was really correct. Well, how about not me being really correct? How about you taking advantage of my correctness and my accurate forecast and making a crap load of money for yourself? That would be the biggest thing you got to do for yourself. Forget about giving me a compliment or so, like sometimes people do. Like, oh, man, you're so, like, so what? I still got my deficiencies. I should be putting a crap load more money in the market and making $1 million a month. Exaggeration, of course, but I'm just saying, can be done. Can be done. So the key is that so we're not there yet. And if it does have a crossover, that's what I was going to say. This comes down a little bit and then it crosses over. I can assure you at that point, the market on the front end, will basically, let me zoom this in. Once this crossover, if and when this crossover does happen this time, from this level, that's a one heck of a bullish engulfing candle. When was the last time we saw something like this? I don't. This is probably the largest one. It's telling you something. Look how large this candle is. So even if it pulls back a little bit, market does a little bull flag, consolidation channel that freaks the heck out of everybody, it has a good chance that if it doesn't give back 50% of this big move, then the market is going higher. Anyway, coming back to this crossover, if and when it does crossover, I can assure you the market will make a new all-time high. Lots of great stocks out there. You got to know how to manage your trade. You know what happens with options traders, and it happens to me sometimes too. But I'm obviously I've been doing it long enough. But more importantly, many of you have been doing it long enough. That's not a good enough excuse. The thing is, you got to know how to manage your profits. Take down profits really quickly if you see a sudden pullback. If you're up a lot, put some trailing stops in there. Put some trailing stops in there. So that's and that type of stuff only you can learn by yourself. Anyway, the last chart, two charts that I'm going to basically show is the famous what do you call it? 533. It is starting to get on the daily. It is starting to get overbought. I was talking to you guys when it was down here. Now we have. Hey, we have Mike and Sue who stopped by. Welcome.
Hello.
We're on the you can listen to the first part, sir, when I put it up on the YouTube. Okay. So there's some good stuff in there. Yeah. So basically, we are right now. We have when it was here, I had drawn a line saying that this was going to go positive. The histograms. That's exactly what it did. Now, whether or not it's going to accelerate, Mike, if you don't mind, can you just put yourself on mute? So if the histograms are starting to accelerate, we don't know it yet. We do know we're getting overbought generally in that 90 range. We move sideways for about a day or so. So I say tomorrow we basically move up, and Wednesday we come down because this has to reset. The reset can come to 70, it can come to 50. And so bottom line is we are very overbought at this point. Expect a sudden pullback at any given time. Some might say, hey, we did have a pullback because we were up 260 some points and we closed up 80 points. So that's 140 or 180 point pullback. So it already happened. Well, we don't know yet, but I'm monitoring this thing here. We are, again, I repeat, an overbought level. Now that's on a short-term, that's on a daily basis. Now, if you want to see what it looks like on the weekly, let me just flip it over. And this is a more positive picture. Why? It is the crossover has just started. The last time this happened was in the throes of despair, Christmas Eve, December 24th, and we had a multi-week rally once the market turned. So if this is candle one of the multi-week rallies, which was December 26th, then we could say that the week starting on let me close all these Google ads here. Hold on. Okay, so bottom line is that this was June 3rd. This is weekly, right? So we're going by week. So this was last week. So we can say, so this was the week of the December 26th. So this was last week. So if it follows this pattern, then we have roughly 4 to 5 weeks, and that's the stretch I can look for, or at least 2 more weeks of a bull rally, which brings us, believe it or not, towards the end of the month, which I have a high probability they're going to end June 30th, the second quarter of 2019, on a strong note, given all the factors that have gone into play that are market friendly. And there are buyouts and mergers happening quite often. We had Raytheon United Technology. We had Data, which we have played many times. Wish we owned it. That got bought out today by Salesforce, that Tableau software. There'll be others. Along the way. So bottom line is that pattern symmetry-wise, this is extremely positive. So despite intraday fluctuations, Wednesday being down, things like that, at least on a weekly basis, we're looking good. So if you're looking to trade the market higher, look at my other charts. Like I said, 2940, possibly a retest of the high 2950 is still in the cards. Now, the last chart we're going to look at, which is extremely important, is the New York Stock Exchange McClellan Oscillator. All right. And oh, Mike, I'm really sorry. Yeah, I forgot to put it on the chat room, the GoToMeeting link. I put it on the Twitter feed, so apologies on that.
Oh,
so
yeah, I found it.
Yeah, it was on the Twitter feed. Normally, I put it in the chat room too. So thanks for reminding me on that. All right, so let's do this. So let's take a look at the McClellan oscillator. This, ladies and gentlemen, was 7th June. What day was the 7th? This was Friday's. This was Friday's. 7th was Friday, right? So this was Friday. This is what the McClellan oscillator was. I told you to buy. I want to remind everybody. Let's say you know nothing about technicals. You hate every single frigging pattern, line, like God knows what. Like, you just have a phobia when you look at a chart. You flip out, right? It gives you a migraine headache. Then simply look at the New York McClellan oscillator. All right? You can replicate this chart on your site on stockcharts.com. So I told you, when the markets get down to minus 65, minus 60, minus 66, even at these levels on a short-term basis, but more so the minus 60, anything sub 60 or close to 60, minus 65, minus 67. Forget minus 109. That was the Christmas Eve massacre. I mean, that's like hands down you buy. Minus 41, minus 63. You inevitably, 90% of the time, one way or the other, like I've said so many times, you get a massive reflex bounce. That's the 1,600 point bounce that we just got on the Dow Jones Industrial Average since last Monday. June 3rd. Okay? And that was your minus 59. Now, this was Friday. We got the green move here, 21. I haven't even updated for today. So let's take a look at it. So remember, anytime you fall in this minus 40, minus 59, everything looks deeply oversold, all kinds of stuff. I'm like telling people, start scaling in. You got to buy. You literally got to buy and walk away. And come back 2 days later and take your profits. It sounds crazy, but it's true. So let's update it for tonight. Remember, this was Friday's close. Bingo. Now we're really pushing. So now we're going to 32. So we're getting up there. We are above R2. I would say by the time we're 38.40, remember, we can go as high as plus 117. I mean, that's really extreme. Okay, we can go as high as plus 117 on the McClellan oscillator. But you don't want to be holding long at those levels, I'll tell you that. So here, I would say that we could go as high as the 50 or the 60 reading on the NYMO, New York McClellan oscillator, because we were minus 60 on the oscillator when I said buy, buy, buy. That's it. So minus 60, can't we go to plus 60? Sure we can. And most probably that's what's going to happen this week. And everyone's going to be super excited. They're going to buy at the top, and then the market's going to be down 400 points. That I can tell you. Because by the time it gets to these levels, the market inevitably have a correction. Now, this is a daily chart of the NYMO. You can see the full stochastics by now. You guys know stochastics, right? You have your station on your pillowcases and your cushions like stochastics. So now it's at 100. Yeah, it can creep up a little bit more. I like the fact that MACD is like shooting forward. All these things you should just be second nature to you by the time you look at it. So this is definitely getting overbought on the daily. Still more room to move. So let's take a look at the weekly. What's the story beyond the daily machinations of the market? This is what's exciting. And on this note, I'm going to end this session, okay? Because I got some stuff to do here that I'm putting away. So saying all that, if you look at this, this is the Bollinger. Upper Bollinger is 71.94. That means there's room to move in the overbought level all the way up to 72. This is exciting. Look at the way it's turning. It is the first bar on the weekly chart on the MACD. By now, you should know what histograms look like. It's quite simple. Histograms are either down, negative, or up, positive. So once it pops into the positive, it means there's going to be probably another bar. So look at this stochastics. It just turned off the bottom. So what is all this telling you? In simple English, they will end June 30th or the last part of June on a strong note. In between, there's going to be vacillations. You rely on my charts, you're going to be fine. You don't, you're finished. But they're going to end June 30th. It's really quite simple. I don't have to remind anybody. Because anybody who's not doing it, that's what they're doing. And so I don't need to prove it because I'm proving it every day through good, bad, and ugly markets and great markets. So bottom line is, the key is that this is on a swing perspective. If somebody says, well, should I buy something 2 weeks out? Well, this technically is telling us, yes, it's okay to do that. But in between, you're going to get a quick snapback. And that's a given. And that snapback could be as early as Wednesday. It's a 100, 200 point snapback. People who have missed out on 90% of the rally, they probably think 100 to 200 point snapback on a 1600 point rally is the end of the world. Well, that's their problem, not mine. Okay, because that's generally what happens. We're up 1600 points. As I showed on one of my charts, you know, the Fibonacci retracement. On which one did I do? Now I'll show it to you. No, I showed it to you guys. It's here. I'll show it to you before I go. You could very easily pull back 150 points on nothing. You know, so this is good. This is good. We are short term quite overbought. And where is that famous? Where is that Fibonacci thing? This is a Fibonacci retracement, 50% retracement. This is the one we wanted to cross, and we didn't even get there on the Dow, on the daily. So that was a good sign. Where is it? Where is it? Where is it? I think it's on my other. Well, this is one fib, so we could easily come down to 28.46. So if we drop from 28.95 to 28.46, that's 50 points multiplied by 7. That's a 400 point drop we could easily have. We could. Okay, and you want to buy that. You want to buy that. Okay, this is a minus 400 point drop from where we are right now, as we speak, with futures up roughly 3 points at 28.92. We could drop to 28.46 in a heartbeat. However, unlikely unless we have another black swan event. Last thing I'll just tell you guys, markets, I've been doing this for a while, and I'm still learning. Imagine what I mean now. Learning how to fight the machines. That's what I'm learning. I'm not learning how to read the markets, trust me. Okay? I mean, that's why I have the ability to teach people. I am learning how to beat the frigging machines. Okay? The machines are so fast. That's my biggest deficiencies. It's tough to keep up with them. So that's the only thing that I am adapting myself to rapidly. All right? Rapidly. Not reading the signals in the market. That I'm teaching you guys, and I'm consistently showing I'm right on that. So saying all that, the bottom line is that in general, from what I can understand, literally everybody, and I'm not talking us, but in general, missed the rally. And they chased a couple. Some got lucky and beyond. And they're like, oh, I make $1 million and beyond, you know, and he's like, they're shooting the crap with his buddies at the bar. Yeah, I got 100 shares and beyond, and it's up like $100, you know. Or I bought the options at 4, which we did tell people to buy. And they went to 60. I put 4,000. I took out 60,000. Oh man, you should just follow me on my trades. That's the garbage you hear from people who don't trade. People like us who trade, we said, yes, we bought the calls at 4. We sold them at a decent number, not at 60, but close to 20 plus. So okay, that's good. It doesn't make me a genius because I didn't buy enough. But then I did buy the 150s and the 140s, and they went ballistic. But I didn't hold it today. How am I supposed to know? You know, this is a pure momentum stock that if you get in, you have a good chance of getting completely scalded, burned in the ICU, okay? Or it probably goes to $200 because at this point, it's a complete bubble. And there's not enough shares out there. And the reason Beyond Meat is going like that, just so you all know, is because the shorts are getting murdered. I believe there's only 58 million shares out there. So some short hedge fund must have shorted maybe a couple of million shares. Those guys are dead. I mean, literally financially dead if it was a small fund with too much of a short on Beyond Meat. So you don't do that stuff, you know? So that's the reason why the stock's moving like that. You know, it's not because you and me are all rushing in there. You know, it's because the shorts are getting killed. So last thing I'll tell you is that markets don't get truly overbought to a level where the next bear market starts till people start to feel very comfortable. We are very far from that. Very far from that. So behavioral finance, and I've seen it happen over and over again, is none of us are comfortable. We're always watching over the shoulder to see, even when all these great trades are going through and stuff that I'm putting through, I am still always watching for that next algo hit where it's coming from and warning you guys about it. So as long as that continues, the markets will continue to go higher because it will keep people at bay, and the majority are not majority underinvested to non-invested in individual stocks. Great U.S. companies are hated and loathed. So on that note, ladies and gentlemen, have a great evening. Participate in these rallies. Selected stocks which have nothing to do with rallies. For example, stocks that I put out there like PagerDuty. That's a great software stock. You can get bought out any day. There was a Bloomberg article saying they were looking to get bought out before they went public. That's been a solid winner. Not as big as Beyond, but it was still up like $5 in the after it opened flat on Friday. Still long that on the cheap calls. Things like Grubhub, which are dirt cheap. So if there is a buyout or anything that happens, you're gonna make crap loads of money. And the calls are what, 20 cents? I mean, come on, just put it away. And things like Nvidia, which have lots of room to move. Things like Edward Life Sciences, which solidly institutional buying. Who knows? There's been quite a few biotech buyouts lately. So what if that stock got bought out? You know what? They give you a 40% premium. So you have Edward Life Sciences, which is one of the finest companies in America, 40% premium on that. That's going to be $80 or $50. So those calls at $1, $2, you'd be selling them at $30. We had that 3 years ago, 4 years ago, with Juno Therapeutics. So, ladies and gentlemen, time to fall in love with the U.S. financial markets, because that is the biggest bastion of our power. So the more you hate the markets, the more you hate trading, the more you hate stocks, the market don't give a shit. The market will go higher. Our earnings are strong. We are strong. We're going to cut a deal with China. We worked it out with Mexico. Our companies will go higher. In between, we're going to get these solid, swift, massive corrections. We can get these inverse head and shoulders. And if you're not trading my charts and your own charts for that matter, I don't know what you're doing. On that note, have a great, great evening. God bless you all. I'll connect back with you guys tomorrow morning. Thank you.
Thank you.